Good afternoon, everyone. This is Brad Matheny. Today is May 18th, Saturday, and I wanted to take a few minutes to highlight what I found on this interesting chart. So, real quickly, yesterday afternoon, I was getting ready to do all of my weekend research and go over all of my data, all of my custom indexes, and other data that I use in TradingView. And I came across this one chart. I was looking around at the SPY and the NASDAQ, and particularly this nice little rally phase that we had over here. Let me come back over here and just kind of show you. So this is a Renko chart. I was looking at a price chart, but I was actually playing around with a Renko chart trying to see. Now, Renko is let me move this to the front. Renko is a type of candlestick chart measuring price blocks in advancement and decline. In this case, I set it to a 15-point block, which is just an arbitrary number that I picked. Essentially, the SPY is a 5,300, 5,400, 4,200, whatever you want to call it. So a 15-point block represents about a quarter of a percentage point, a little more at lower numbers. But it's still a pretty good increment in the sense that, the SPY pretty much can move on average about a quarter of a percent a day on average. Now, smaller at times, larger at times, but still gives us a pretty good indication of trending. And when I was looking at this data, particularly looking at this breakout to the upside this current week, meaning we're establishing new highs, very strong trending after this fairly decent pullback. What became very evident to me is this: as I pulled all the way back through the data, back into this time frame, I very clearly saw the Elliot Wave structure. It was almost like, it was just a piece of cake to me that this was the setup. And again, it was very clean from this low down here in 2009, which again, we don't have the data going back. You can see here, not a lot of data pinpointing what actually took place from 72 onward in this 15-point range. We can assume this is a critical peak high rolling into a widening kind of a wedge flag. You can see the shape of the flag here actually goes all the way back over into here. But again, we get into this type of a move where this whole breakout trend starts to become very evident. This new high rallying up to this new high all the way up here becomes very, very clear. And if I take a look at this chart and point this to you, this is what I was looking at, ignoring the lines that I drew on this chart. Let me get rid of this line. So, yep, that's correct. So now I'm looking at this and I'm going, wow, Elliot Wave, piece of cake. Look how clean this is. A, B, moving into a C pattern, moving into a D pattern, moving into an E pattern. Wave 1, off of the low. Wave 2, correction. Why am I calling this a wave 2? Because it moved down below the wave D, which would make sense that it has a substantial pullback below this wave D into the wave 3 here, wave C formation here, finding support. And no doubt, if I come take a look at this support is going to be very cleanly, yep, right at the 382 level. Beautiful, beautiful, beautiful pullback into the 382 level here for a wave 2. That's nice. I like to see the Fibonacci alignment. Then we move all the way up into this move, A, B, coming up to it. We've got our 1, 2 coming up to A. Do the same thing. Let's see how we got our pullback. Did this pullback substantiate below the 382? It did, almost to the 0.50 level. Perfect. Ideally, structurally very sound for an Elliott wave. Then we move up into this wave C move here, which, okay, we have a C move. We're in a big C move. C has to be larger than wave A. So again, just my routine is I draw the A move. And again, you can draw it a little more aggressively, because all we're measuring here is a price move. We clone it and move it over here to the B. And now we have a very clean opportunity to see that the SPY or the SPX500 here, in theory, if this is A and C has to be bigger than A, then we have a move up to at least 6,100, possibly 6,200 in place. And again, that puts us here 6096, possibly up into the 6862, maybe 7,000 range from where we're at right now. That would be approximately a 200% move. But now, if we were to take a look at the move, the corresponding move between this low to this high, which is what I've done right here. I'll rearrange it so you can see it. This is a Fibonacci expansion from the ultimate starting low right down here to the wave 1 peak coming down to the wave 2 bottom. Now we go ahead and see that 100% measured move is here, carrying up to 150% here. Let me drag this out of the way. Carrying all the way up to a 1.75% up here. So this is 7,000. Okay, now we have our secondary wave from this low to this high with a Fibonacci, bring to front, pulling back down to this wave B low, sets us up a secondary wave. Now, what I would be looking for in this secondary wave is I would be looking for targets somewhere between the 1.5 level here and the 1.5 level here, and possibly 2.0 to 2.0 level here. That puts a target range for the upward move somewhere between here, let's say, and here. Here and here. So that puts a target range right there. And that's where I had originally expected in my drawing this market to move. So in theory, again, if this analysis is correct and we see a move extending up beyond this 1.4, 1.3 to 1.5 area, we're going to see a move up to this area, down to possibly about this area, maybe a bit lower, and then up to this 5 area right up here. And it's going to be a very clean advancement for the SPY and the SPX and the NASDAQ to move very cleanly, in my opinion, up from this current level. I want to draw a picture here. From this current level where we're at right now, you're talking 104% potential upside move, 105% potential upside move. Now, this is, and let me do it this way, 105%, and let's see where we're at here, 55, maybe 56%. So understand that we, as I keep telling you, we are in a very solid upward trend. And I want to highlight again, structurally, mechanically, this move here, this move from B to C has to be at least equal to or greater than this move A. Well, we're already technically, right here is the move, the 100% move right there, that blue line. We're already, that would put the SPY at a minimum of 6,100, whereas we're right now at 5,306. That would put it at a minimum of 6,100. And I will try to draw a line here, meaning this is our minimum target level that equals the expansion range of wave A. So we have to get at least above this, more than likely somewhere up in this area, which again, this is the target area, And I can maybe rearrange this a little. So maybe somewhere in this area, I would suspect would be the ideal target area for the end of the wave C. Now, what this would be then is if this is an A, B, C, okay, and again, we could get very complicated here. Remember, I'm looking for a major market peak somewhere around the end of 2029, early 2030. So I'll put this here, get rid of this. And I want you to think about this for a moment. We could set up a C, followed by a D, followed by an E, like this. And again, this could set us up into a very large rally phase like this. Major pullback, possibly coming down a little further, setting up a big wave 5 all the way up to here. And so this would give you an idea that we are looking at a fairly big pullback range over in this area, possibly down in this area, reconfirming support. And now remember, the reason why I'm drawing this area right in kind of this low is just like we saw right here off of the D pattern. We came down on a COVID collapse just below the D. And if this is again holding up, we would see support very similarly right around this D pattern. But this again stipulates that we have a very strong potential for a 55% to approximately, let's alter this to 100% move in the SPX, SPY going through the next 5 or 6 years. Understand that this would be a very big rally. And I haven't drawn this very cleanly because I'm way beyond my date here. So let me cancel and redraw. So redraw here, redraw here, redraw here, redraw in this area. Get rid of that. Move D. And again, I'm going to draw these very tight because I do believe that we're going to see the wave rotation happening very aggressively, meaning it's going to happen quickly. We're not going to be waiting around for this. This is going to be a potential very strong move, settling, peaking up near 2029, 2030. So you're looking at a move like this, down to here, up to here, down to here for pullback, and then all the way up, straight up pretty much. Now, is this correct? This could be a little bit better drawn, but again, is this correct? I don't know. I will tell you that structurally, based on Elliot Wave theory and everything that I've learned, okay, we're at a new high. Fibonacci price theory teaches us that this is a structurally sound upward trend. We've got a very clean ABC pattern starting all the way here. A, B, C, D, E, 1, 2, moving up to 3. This could translate into an ABC pattern, could turn into an ABCDE pattern as I've drawn here. C has to get larger than wave A. That puts us at a peaking area up in here, up in this area. I strongly suggest that it'll be up in this area, 7,200 to 8,500. Then we'll be looking for an immediate pullback, probably pretty sharp, rallying up into 2027, 28. This could be a very quick move, maybe a year or so. Then we move into this pullback. Notice how I'm sticking to Fibonacci ranges. Okay, 2.5 area here, right back down here to the 1.3 area and the 1.75 area, which comes very, very close into this 1.38 area across here, and then moving up right into this 4 area. So if I were to clone this, try to get to it, clone this area right here is right around that 4 area, going right across here. See these 4s? That's a 4 times move, and that represents from where we're at right now up in this high, that represents 140% potential upward move in the SPX over the next 4 to 5 years. Now, am I, again, 100% confident this is going to happen? No. I wish I could be 100% confident, but I will tell you that based on my analysis, based on my knowledge, and based on my interpretation of the market data, unless there's something that derails the global economy, in my opinion, the only thing that's going to get us to this location right here is continued Fed and global central bank tampering with the economy, resulting in moderate hyperinflation over the next 7 years. So be aware that this looks like a very strong hyperinflation phase is going to set up, possibly sending gold, silver, and many other assets through the roof over the next 4 to 7 years. Okay, that's really what I want to tell you is this. Just see if I can put it in here. %80 to 150% higher over next 5+ years. And be aware, folks, this is a massive, massive chance to really pay attention to what's gonna go, what's gonna happen. It's really, I mean, the writing's on the wall, in my opinion. So I'm just giving you a heads up right now. Today is May 18th, 2024. Get ready for one of the biggest opportunities of your lifetime. It's coming. Okay, guys, talk to you later.